Well, we're going to put some oscillators to the test this morning. And a warm welcome to one and all. And for those of you not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy Trader. I wonder what gives you that idea with my toys. I love me toys, I genuinely do. The more the merrier. I've got all sorts on my desk, and it's kind of all sci-fi related because I'm just a child. But I'm a child that's pretty good at trading. And why do I have the toys? Because you need to calm your mind down while you're trading. It's kind of why I listen to a lot of music, and the guys in the Discord will sort of vouch for that. But when you're trading, you need certain sort of fundamentals and plans. Thank you very much. And definitely coffee, because we all know Scruffy likes a coffee. And those fundamentals and foundations is what I'm doing with these videos. Now, nothing's ever scripted here. It's a live working office, and it is literally just me switching the camera on and showing you what I do. So let me flick this over and I'll show you. Now, if you haven't seen any before, this is part of a foundation that I'm putting together that you find in the Scruffy Squad. Now, some of them are public and some of them are just for the squad. And what it is, it's from the start of trading right through everything you need to become profitable, and it'll all be here, and it's getting added into constantly. And what I do is do a little bit of a video at the beginning of the week explaining something, whether it's levels, moving averages, oscillators this week. Next week will be leading indicators like Ichimoku cloud, that sort of thing. And then on a Friday I'll put it to the test, because we've done fibs, the tests, and as you can see, I did a basic video of oscillators. It was just a glossy of what they are, but then how you can use the oscillators as triggers. Now, there are many ways to use the trigger, and if you think it's just overbought, oversold, you're probably going to lose money. There's so much more to it than that, and that is fully explained in part 15. And today we're going to kind of put it to the test and show you how you can combine things. Now, what you'll be seeing here is the trade. If you're interested in seeing what the makeup of it is, do check out all the other videos and you'll see it, because today is just a test. So what we're looking at, well, first of all, we have two oscillators on here, and the reason being is I'm going to use one as a trigger and I'm going to use one as a bias, if you like. The RSI is here, so it's kind of telling me the bulls are in control, the buyers. I am watching up here so I can see the key levels. It's had a drive up, it's moving down, it's coming down, and I've got a stochastic moving up as well. So what I'm wanting to do is buy this market. All right, it's just basic stuff. So I'm going to drop it down onto a 5-minute chart. Don't require this anymore, and now it's a case of I wait, and I wait till the conditions are correct. So what I'll do is I'm going to pause the camera just now, because we could be waiting maybe half an hour or so. If it slams down and gets earlier, fine, but the idea is I'm going to get it to a point where I can enter the market, get 5 or 10 pips out of it, and I'll be quite happy. But it's used by an oscillator to gauge a direction, tell me the strength of the market, and then a trigger to get into the market. Okay, so I'll come back to you shortly.
Well, we're waiting.
Okay guys, we're back. Showing volatility, broke a level, ready to rock. Let's buy the market and see if we can get a few pips out of this. So easy as that. Very simple. And it is a very, very simple trade. It's all measured out. And if you go through the foundation, you'll know what these measurements are. And there it is there, starting to move straight into profit. Happy stuff. Happy, happy stuff. So I'll let this run out. I'm looking to get it to here. And I'll be quite happy. So, well, might actually do it now. So we're at, come on. It hasn't got far to go. Just one little, nice little burst. Okay, okay. Come on. Up, up. Just a little more. Anyway, I'll let it play out. May do a little bit of price bouncing on this. But we'll see. Okay. Catch you in a minute, guys. And that was that, guys. Job done. It's done quite well. It's been a bit rough, shall we say. But if we look at this, yes, we gave a little bit back. And I'll tell you for why in just a second. But just carving away backwards and forwards, 169. The reason being is this has now got into excessive territory. More so than it was down here. Here it was just tipping over. But once you get up onto 90, it starts getting a little bit scary. And it's also had a number of bites of the cherry, which is why. And if we look at it, since I started this earlier on this morning, which was this break here, and what I was looking for, the RSI was telling me the buyers were there. And I kept monitoring it to make certain it was still above the 50, which it was. And I was just keeping an eye on this to see what the oscillations were. Now, as you can see, it's been in a very, very tight range. These were my sort of new entry points and also boundaries to the chart. And if you go through the foundation, you'll see why the levels are there, what those marks are, what the Fibonacci points are. And it's just a case of piecing it all together. And when you have a situation like this, where it's bounded between that level and that level, because that's kind of what I was working on, it's very tight. So you've just got to crawl out as much as you can. So from there up to the highest point, if I pull that across, it's 20 pips. So I was working within a 20 pip range, getting in and out, in and out, in and out, but keeping an eye on the volatility from the RSI and the stochastic to make certain I didn't get into trouble. The only time I was a little bit concerned was here, because that's when it's pushing and shoving the other way, but the sellers weren't there. Well, there you go. Just a quick one. It's really just putting things to test on a Friday, and if you've got a decent amount banked, don't worry about just killing a trade to have a peaceful afternoon, because that's what I want. I don't trade much on a Friday, and as it was getting past 2 o'clock, I just wanted out. You know, I want to enjoy the weekend, do it all again on Monday. I've been paid reasonably well, and that's my job. That's what we're here to do. We're not here to be a hero and hang on to trades. We're here just to be paid, and that's it. So if you've got any questions, drop them in the comments below. You will find my direct contact details in the description. You'll also find decent brokers and a discount code off a prop firm if you want to try the 5%ers. So as always, guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.